Welcome to Wealthy Trades Daily. This is Tyson Clayton for March 16th, 2015. Friday was a big sell-off day, but it was actually kind of a key reversal day, meaning we sold off aggressively midday and then actually spent the afternoon on Friday rallying back. But we still roll into today, Monday, the 16th, in a pretty aggressive downtrend. In fact, we can see on a daily dashboard, out of the 502 stocks that we're analyzing, 74.7% of them are in a downtrend, and the quality, if we're day trading, is above 50%. So therefore, we're going to look for shorting opportunities on a daily basis. We're going to look for shorting opportunities in the best sector in the direction of the trend. All right, so we are looking in the consumer staple sector, the XLP, because the XLP has the highest quality score of 78.3. So that is the sector we're going to look in. So I'm going to hit the plus symbol next to the XLP, move that over into my portfolio. And then we're also going to drill into each one of the 8 stocks within the XLP to find the best opportunities that we can look at for today. And obviously we need to structure short positions. Right, we'll also do the same process on a weekly basis, today being Monday. But let's go through the daily process first, and then we'll talk about the week. Today we don't have a ton of economic news. In fact, we don't have anything big coming out at all. We do want to watch oil. Oil's starting to break down into levels it hasn't seen since 2009. I believe that this will have a trickle-over effect or trickle-through effect and start affecting all sectors and actually have a deflationary push down. It shows that the consumer is starting to slow down, and it's something that we want to pay attention to. On Friday, you would have seen on the dashboard that you should have been short the XLE, and actually done a pairs trade, short the XLE, long the XLB, and that would have been a decent trade on Friday. But the energy sector is getting substantially beat up, and the only reason why it wasn't the best performing sector today is because it had a pretty key reversal on Friday, as I talked about. It didn't, or actually the XLE recovered much better than the XLP did, or it would have been the best sector to short in. Let's look at let's pair these down. Again, we're looking short today. We're looking fairly aggressively short because the trend is obviously down. 74.7% of those rolling in today is in a downtrend, and the quality is above 50%. As of right now, it's about 7:15 on Monday morning, and we've got the futures looking to gap up slightly. So that's fine. We want to find good opportunities. If it does gap up slightly, we still want to be confident enough to take the short position. So let's pair this down. Obviously, we're going to use our normal pairing process, which is moving the best sector and the best stocks within those sectors into our portfolio, and then using the levels to win data to pair this down. And the first thing we look at, if you guys remember, if you've listened to this and continuously, please listen to this every day so you can get updates, and this will start to become a process for you. The way we want to pare this down is we want to first look at the levels to win profit, and we want to see a profit on both sides. And what that represents is it represents to me that this stock is moving in a downtrend, in a market that's moving in a downtrend. This is the sector that's at the best downtrend, and it has a tendency to continue to go aggressively in that direction. And I know that because whenever it hits this, the XLP, when it hits this upside level, which is 48.56, that's the expected upside for today. On Friday, it closed at 48.28. When it hits that level, historically on a Monday, it bounces off and sells off from that level. That's what we want because we're looking to sell today. So let's look at the chart and see what that looks like. So again, what this levels to win profit is telling me is if the XLP rallies up today and hits that upside level, all right, that upside 48.56 right up here, right, it's that upside of the box, then it has a tendency to hit it and then fall, which is what we want because we're looking for areas where we can short. That's good. It also has a tendency, remember it closed at 48.28, it also has a tendency when it hits the 48.04, which is the downside level. Okay, we've got a lot of congestion, a lot of support sitting at that level, but when it hits that level historically, it typically continues to go. So that's another good thing. That's what we want to see. Okay, so that's my first filtering technique. All right, I'm going to do that on all of these stocks, and in anything that doesn't make money on both sides, I'm going to eliminate. BF.B for some reason isn't pulling up, so we'll just eliminate that one. Okay, so KO we want to eliminate. Here's an example of one that we want to eliminate because it loses money on both levels to win profit. What that means is when it hits these daily levels historically, it typically hits that level and then kind of consolidates. So today, if we could sell premium, or we could do kind of a range bound trade, maybe with options, that's what we'd want to do today in KO. But that's not what we're going to talk about today. We'll talk about that in more advanced videos in the future. But I'm going to eliminate KO for now. I'm going to eliminate GMCR. That one loses money. Keep TSN. And keep PG. Okay. So now we've narrowed it down to the 6. Alright, so that's good. We're going to take it a step further. And we're going to then narrow this down using the historical hit rates and the levels on levels. Now, if you remember, let's take TSN for example. All right, so let's drill into this, and so I can give you a visual of what this represents. Okay, so TSN has an expected low. All right, it's in a downtrend of 36.94. All right, that's where it should hit. It should hit 36.94. That's down here. It has an expected high of 37.90. That's up here. Okay. It hits this level, this trend side level, which means the downside because it's moving in a downtrend. It hits that downside level 59.6% of the time. So that's great. It has a very high probability of hitting that downside level. And when it does, it has a tendency of closing below that level more often than not because it hits it 59.6% of the time, but overall it closes below that level 36.5% of the time. So therefore, that's great. And it makes a great profit on the levels to win profit. So that's good. So we know now we have two shorting opportunities. First of all, we could short right at the open because it has a high tendency of hitting this downside level, 59.6% of the time. And we could also, let's say we're not comfortable getting in at the open, but we could also get in on a breakout trade when it hits this 36.94. We can look to get short there too because it has a tendency to fall aggressively from that level if it hits that, and then we can hold it till the end of the day and then close it at the end of the day. So that is a trade that I'm going to look to do. I'm going to short at the open, and I'm going to let this thing run. I might even add to it at 36.94. The thing don't like is this counter trend level. All right, so when it hits this counter trend level, which only happens 25% of the time, so it doesn't happen all that often, but when it does, it has a tendency of closing above that more often than not. So even though it's profitable, all right, even though when it hits this level historically, it does have a tendency to make money, more often than not it closes above it. So therefore, I'm going to use, if I go into TSN, and I might actually eliminate this one, we'll pare it down a little bit more here in a minute, but if I do decide to get into TSN or keep it, and I decide to short at the open, then I'm going to either short at the open and potentially add to my short position if it hits 36.94, and then close it at the end of the day. But I'm going to use this 37.90 level as my stop level. And the reason why is because it makes a little bit of money, but not much money. And when it hits that level historically, more often than not, it continues to go higher. So I may eliminate TSN, but if I don't, I'm going to short at the open. I'm going to add to the position at 36.94 short, close by the end of the day, or close if it hits 37.90. But let's go into the other ones. I may actually eliminate that one after I get done, paring this down a little bit. PG, in fact, I am going to eliminate TSN, but that was a good example of how I could use this levels to win data to help manage the trade. But that was all said for nothing because I'm going to go ahead and eliminate it. Okay, let's go into PG. PG is a little better. It's not great. I'll probably eliminate that one when it's all said and done. Or probably not be as aggressive on that one anyway. But let's pare this down and look at this one. It has an expected low. All right, it's in a downtrend, so the trend side level, the expected trend side level today is 81.33 down here. It hits that level 59.6% of the time, so that's great. It hits it at a very high rate. When it does hit that level, it has a tendency of closing below that level more often than not, because it hits it 59.6% of the time, and overall it closes below that 30.8% of the time. If the levels on levels is greater than 50% of the HPP, then we know it has a tendency, when it hits it, it has a tendency of closing beyond it, and that's what we want to see on the trend side. It also makes money. On the counter trend side, all right, so it has an expected high, which is the counter trend side of 82.33. It doesn't hit that level all that often, okay, so that's good. When it does hit that level, it's about a coin flip, but a little less than half the time it closes above that, so that's good. So this is one we're going to keep. If you remember from the pairing strategy, what we want to see is we want to see a profitable levels to win on both sides, the trend and counter trend side. We want to see the trend side HPP compared to the levels on levels 50% or less. So we want to see the levels on levels greater than 50% of the HPP, and we want to see on the counter trend side the levels on levels less than 50%. So this one, no, I apologize. This one does not meet my requirements. It would actually have to be an HPP of 34.6. So this one I'm actually going to eliminate. I'm going to eliminate PG. All right, let's go into K. And it didn't make all that much money on the counter trend side, so therefore, it shouldn't surprise me that it wasn't 50%. Okay, so K, this is one that we will keep, and I could tell just by glancing at the numbers real quick, but let's drill into it. Okay, so it's got an expected downside, which is the trend level of 61.74. I see that right here. Upside of 62.56. It hits this downside level 57.7% of the time, and it closes below that. All right, so I want to see this levels on levels more than 50% of the HPP. It is. That's great. It makes money. The expected upside level, the counter trend level, is 62.56. It hits that only 19% of the time. It only closes above that 7.7% of the time. So I want to see this less than 50%. So that's good, and it makes money. This is one we're going to keep. So the plan with K, now it doesn't make a whole lot of money at this counter trend level, but the plan with K is to short at the open, add to the position at 61.74, hold until the end of the day, and I'm not going to have a stop on this. I'm just going to close it at the end of the day. That's my plan on K. All right, so let's go into EL. EL, much the same. This one looks great. We have a levels on levels of 34.6, HPP of 55.8. That's greater than 50%. Makes money on both sides. Levels on levels counter trend of only 9.6. It hits that level 32% of the time. That's much greater much less than 50%. That's what I want to see. EL, this one looks absolutely great. This is by far the best one that I've looked at so far. I do like that the expected upside level is, we have some resistance up here. I do like that. That's good. EL looks great. If I had to pick one of these based on the two that I'm keeping so far, which is EL and K, I would focus on EL more than I would K, but both of them look good. Let's go to ADM. Okay, ADM, I'm just automatically going to eliminate. You'll get to the point where you can just look at this and come to a conclusion on whether you're going to keep it or not real fast. And so ADM, I'm going to eliminate right away. The reason I'm going to eliminate it is because I can see here that the levels on levels counter trend side is more than 50% of the HPP counter trend side. So I'm going to eliminate ADM right away. And XLP, that is the sector. So I'm gonna keep the sector. I typically keep the sector. Game plan for the sector. If I were, again, I don't like this. I would eliminate this. This would actually not meet my requirements on the counter trend side, but I'm going to keep it because it is the best sector. But here's the way, if I decide to go into the XLP, which I am going to go short the XLP, along with these other two stocks, here's how I'm going to manage the XLP based on the levels to win data, all right? So we've got an expected downside, the trend side low, of 48.04. All right, down here. We got an expected upside of 48.56. Here's what I know. When it hits this downside low, even though we've got some nice support down here, I think it's gonna fall through that. It's eating up some of this level right here, and I think when it hits that again, it's probably going to fall through fairly aggressively. Stats tell me that when it hits that level, more often than not, it continues to fall, and it's profitable. So I'm going to short at the open, and I'm going to let this thing ride all day long and potentially add to my short position at 48.04. Here's what I'm going to do on the upside. If it hits this 48.56, I'm going to take the stop because it isn't all that profitable. It doesn't make a whole lot of money when it hits this level. And when it hits that level historically, more often than not, more times than 50% of the time, it hits that level and it continues to trade higher. So therefore, I'm going to use this 48.56 as my stop level in the XLP. All right, so I'm going to short at the open. I'm going to add to the position at 48.04, and my stop is going to be 48.56. If it hits that, I'm going to just get out of the position and be done for the with the XLP. In EL, I'm going to short at the open. I'm going to short at 79.95, add to the position at 79.95. And if it hits 81.11, I'm going to add more to the short position there, and I'm going to hold it all day long and close it at the end of the day. So it's basically a short all day. In K, the same thing. I'm going to short at the open. If it hits 61.74, I'm going to short there. And then if it hits 62.56, I'm going to actually add to the position there too, and I'm going to hold that one until the end of the day. So for today, that is the plan. We are in a downtrend. The percent of stocks in a downtrend is 74.7%. Quality 69.9. Therefore, we want to short stocks in the best sector or the sector itself. We pared it down. The best sector to short today is the XLP, and there's two great stocks in the XLP that we want to look at, and that's EL and K. And feel free to short all day long in those stocks. Okay, let's talk about the weekly. Last week was a phenomenal week. If you looked at the dashboard, much like this week, it was actually very similar. Percentage of stocks in the trend. We're in an uptrend on a weekly basis, all right? But the percentage of stocks in the weekly trend is 70.5%. We're still in a real aggressive uptrend. Problem is the quality of that uptrend is not good. This is the same as last week. The quality of the trend last week was very poor. It was like 45%. Therefore, you shouldn't have been all that excited to just go long stocks, right? You should have done a pairs trade. And last week, the pairs trade that you would have been doing would have been long the XLV. That was the best sector. This week it's the XLU, but you would have been long the XLV, short the XLE. Last week, the XLV was up 0.2%, even though the market was down almost 1%. The XLV was up 0.2%. And the XLE was down 2.65%. Therefore, the pairs trade, if you would have done that last week, would have been up 2.85%. Compare that to a market that was down 1%. That is the power of wealthy trades. That I can't say it enough. That's the exact reason why you subscribe to our service, because that is the powerful stuff. In the face of a market that was down almost 1%, using the information of the quality gauge, the trend, you would have been long the XLV, short the XLE for a pairs trade, and you could have made 2.85%. That's phenomenal. We're going to do a very similar trade this week, but it's going to be long the XLU, short the XLE. We can pair this. We can take this a little deeper, and I will. Let's actually do that. That's the simplified version. For this week is just going long the XLU, short the XLE. I'm going to drill into this a little bit deeper to see if there's some stocks that we can focus on going long in the XLU, in the utility stocks, and short in the energy stocks. But let's just do that real quick, and I'm going to go kind of quick on this. So hang with me, just to see if there's anything great. Remember, K and EL are from the consumer staples for today. I'm not sure if I'm going to find anything great here. Yeah, in fact, I'm not. All right, we're going to keep this real simple because there's not any individual stocks that I see within the XLU that look great on a weekly basis. What I mean by that is, let's take CMS as an example. This is on a weekly basis. CMS has an expected high. Okay, so let's look at this, just so you know what I'm looking at here. So CMS has an expected high of 34.20, or I'm sorry, high, because we're in an uptrend. This is in the utility sector. has an expected high of 34.21 up here, an expected low of 32.77. It hits this high level very frequently, but here's the thing: when it hits that level, more often than not, it loses money. That's not shocking because a lot of times these market makers will price their risk, especially on a weekly basis. And they'll if think about this: when the market rallies up to this expected high, especially if this stock has weekly options, well, those market makers in the options pit are pricing their risk. They're selling premium based on how far something should move. They're kind of underwriting the market based on how far they assume something should move. So if CMS rallies up to this 34.21, and the earlier in the week it does that, all right, the more it makes them off balance, the market makers off balance, and that's the last thing they want. They don't want to be off balance. They want to be hedged as much as possible. They want to sell premium to you and to me and to the market and not lose money. That's their main thing. So if this rallies up to 34.21, they have a choice. They need to either rally this aggressively and start pushing this up even higher, which it makes it tougher. If this thing's already rallied from 33.49 to 34.21, it makes it harder for it to continue to go. Or they have to beat it down. And the reason why is because they have premium sold expecting it not to go above this or below this. So therefore, when they get off balance, they have a choice. They either have to aggressively rally it above that level or sell it off. And a lot of times in this stock, as you can see, when it hits one of these levels, they have a tendency to close it back within the range. So if you know options, CMS is a good stock to actually sell premium on at that expected high and at that expected low. You can sit there and sell, do maybe call spreads at the expected high and put spreads at the expected low, collect that premium and have it expected to close within that range. It's a more advanced strategy. I'll get into that in future videos, but that's how you could use this information to collect premium there. We're not going to talk about that today. I'm just going to pare this down. In fact, as I said, there's really nothing that I can find that gets me real excited in the XLU or pairing the XLU. There's no individual stocks. So here's what we're going to do on a weekly basis. We're going to keep it very simple, and I'm going to just add this to my portfolio. We're going to keep it real simple, and we're just going to go long the XLU. And because it's a hedge trade, we're just going to we're going to just have this stay open for the entire week. So we're going to go long the XLU and short the XLE. And that is what we're going to do as our pairs trade, much like last week when we were long the XLV. Short the XLE. Same type of trade this week. For today, we're going to look to go short in the consumer staples sector. And also feel free to short EL and K. For a monthly basis, it's mid-month, so we really don't have to spend a whole lot of time on this, but here was the stats for this month. We rolled into an aggressive uptrend. The quality of that uptrend was good. This month, you should have basically been long the XLV the entire month, starting, the 1st of March. You should have been long the XLV. And as of right now, give me a second here. Let me check on my other. The XLV is down, slightly, not down much though, for the month. But you should be long the XLV. And you could have sold some premium maybe at the expected highs. I wouldn't do that right now. Again, in future videos, I'll go over more advanced techniques on how you can sell premium on a monthly and weekly basis, using the levels to win data to do that. So again, just to recap, for the day, we are just going to be short in the consumer staples sector. The stocks that you can, so the XLP, the stocks you can short within the XLP, the best ones are EL, short at the open, short at the expected low, 79.95, and also short at 81.11. Those are all good levels to short at. And then the same thing with K, short at the open, short at 61.74 or 62.56. And then for the week, we want to go long the XLU, short the XLE. All right, just do a pairs trade, keep it simple, keep it open all week long, close it at the end of the week. For the month, you're just long the XLV. All right, guys, we will talk to you tomorrow. Make it a good day. Be sure to check out our resource tab to stay up to date on videos. I did add some videos on there. I will be adding some more videos, some more premium videos. and strategy videos. So if you have any questions, you can email us at info@wealthytrades.com. If you are listening on YouTube or podcast, this information is old. We post this in the afternoon on the Wealthy Trades site. I post these in the podcast under the resource tab. Under podcast, I post these before the market opens every day. There's a benefit to be a subscriber, so you can get this information live, so you can get this information and actually act on it. Anyway, make it a great day. If you have any questions, email us, and we'll talk to you tomorrow.